What's good, guys? My name is Ishan. You're probably busy, which is perfect because on this channel we like to keep things short and sweet. No fluff, just quick and to the point. So in the next few minutes we're going to be going over Tesla's massive earnings that's upcoming on October 21st on Wednesday. We're going to be going over all the nitty-gritty details plus a quick technical analysis at the end, which could be indicating a massive move in Tesla's stock price. So as always, if you enjoy these short and value-packed videos, make sure to drop a quick sub and let's clock in. So firstly, I am a Tesla bull. Along with calling out Tesla multiple times, I've called out other stocks such as Appian, which is up 70% since I called it out in the 40s. Elastic NV, which I called in the 90s, that's now at close to 120. Datadog I called in the 90s as well, and other picks like Virgin Galactic in the 16s, MongoDB when it was at 230, and so many more. But as you can tell by the videos I've made, the one company I clearly believe in the long term is Tesla. And one of the biggest things I've learned along the way is to never bet against the company. While the S&P didn't add them to the index and Wall Street analysts have been calling Tesla a bull trap for years, us bulls have been going to sleep knowing that Tesla has only continued to blow past expectations and will do it again this quarter. So let's start off with deliveries and production. In the second quarter, Tesla produced 82,000 cars and delivered 91,000 cars. For the third quarter, Tesla earlier this month already reported third quarter deliveries of 139,300 vehicles, which was way above Wall Street expectations. And a lot has to do with the Model Y. The car has honestly been a beast for Tesla. Within 5 months, it became the third best-selling car in the world despite being a fat $10,000 to $20,000 more expensive than the Model 3. And considering that it shares 75% of its parts with the Model 3 and it's at a higher price, it's basically like the equivalent to the Fed's money printer for Tesla. High price, high margins. Now Tesla has put an ambitious target for 500,000 deliveries this year, meaning they only need to deliver 190,000 cars in the fourth quarter. We'll go more into depth about this later, but honestly it's just mind-blowing how much they plan to deliver, and you can expect healthy and nice numbers. Now onto China. The Shanghai factory is only really just geared up this quarter. Since the pandemic, this will really be the first quarter we see how well the factory does, and oh boy will it be good. The made in China cars are firstly much cheaper to make, and we know that because Tesla ended up cutting prices there significantly by 8%. The cheapest option of these autos can be purchased for about 270,000 yuan or $39,000 after subsidies, more than 30% less than the same model imported from America. And lastly, Tesla's market share went ballistic in China to a staggering 21% from 6%. What this goes to prove is how much demand Tesla really has, despite their cars being considerably more expensive than a lot of these cheaper, smaller Chinese EV players. So factoring this all in, the cheaper production in China, the Model Y, we can expect fat, cushy margins for Tesla when they report this quarter, and most likely another quarter of profitability. China will also significantly help Tesla's target of 500,000 deliveries. In Q4 of last year, Tesla delivered 95,000 cars without China. So now the factory, as of last reports, was doing 4,000 cars a week in July, and by now most likely 5,000 plus. Meaning in the next 3 months, that's 50 to 60,000 deliveries from China, plus another 100,000 from Fremont. So if Tesla pushes really hard, we're looking at them being pretty close to that 500,000 number. In fact, maybe even crossing it. Now here's the thing, even if they do end up missing that number, it's fine. Because look, honestly, no one even thought Tesla could even get to 500,000 by this year. So just by getting as close as they can to it, just goes to show the production capacity they've built out and how much long-term and future growth they have. Next up, we got Tesla Solar, probably one of the most overlooked segments of Tesla's business. Sure, a few caught fire, but it's picking up steam. With government incentives, Tesla's panels are only $1.49 a watt after federal tax incentives, and there's a money back guarantee which just makes them even more reliable. And the thing is that you don't even have to pay for the panels. You can in fact get them placed and rent them out for as low as $50 a month. And the main key thing that stands out to me is that like other solar players, Tesla does not have to rely on a bunch of people to go out and sell them simply through referrals, zero marketing, and the same strategy they use to build up their massive car brand. I mean, it's just unheard of what Tesla was able to do. The global solar energy market was valued at $52.5 billion in 2018 and is projected to reach $222.3 billion by 2026. And what's crazy is that Elon Musk said that the solar business will be just as big, if not bigger, than the automotive business. And in that case, Tesla's revenue would be massive. These babies cost as much as a Model 3, and it's only a matter of time before they start bringing in Tesla some serious chunk of change. And look, they got the contracts to prove it. Over 420 Walmart stores use it. Amazon warehouses use Tesla solar panels. So all around, as everything we've discussed begins coming into fruition, Tesla's revenue will only explode. Now, the cost of Tesla's cars. Elon announced a potential $25,000 car in the future. Now, this is bigger than you can think. When Tesla launched, their car prices were insanely high. They still are, but let's say the Model 3, you can get a super low base model for $35,000. And so as Tesla continues pushing prices lower, bringing in new features like self-driving, this just makes the car a lot more attractive and affordable for a lot of people. Meanwhile, other competitors are entering the market with expensive cars like Lucid Air, whose car will be starting at over $70,000, as well as Rivian. As these guys come in with their expensive models, Tesla, they on the other hand will be making the cars even more cheaper, even more better, and honestly impossible to compete with. People need to realize that Tesla is the future. They have the brand, they have the technology, and bringing me to my next point, they have the cash. Last quarter, Tesla had an $8 billion mountain of cash, and they also raised $5 billion in cash in September. When they report this quarter, you can expect them to have easily over $10 billion in cash. And so what this means for Tesla's future is simply more growth and expansion. Shanghai and Berlin are still being built out, then we got a Texas one right around the corner, and Fremont is just constantly upgrading. Now with all this cash, it gives Tesla the reserves to continue the development of those factories and scale up production of their new capital-intensive products like the Cybertruck and the semi-truck. And then Tesla is being paid literally hundreds of millions of dollars by selling their zero-emission vehicle credits. Basically, certain states require that car manufacturers produce and sell a certain number of zero-emission cars or face a large tax. If they do sell EV cars, they get a zero-emission tax credit, and Tesla has so many of these that they sell them to other automakers struggling to meet the standards. In Q2 alone, Tesla brought in almost $500 million in revenue just from selling these and other regulatory credits. And obviously this is not going to be sustainable long term, but there's no sign of this slowing down, and by the time that let's say it even does not become a big part of their business, by then in the future Tesla will already have expanded their business so much that the lack of sales from selling these, they won't even matter. And now lastly, for a quick technical analysis, as you can see on the charts, Tesla is forming an ascending triangle. Basically what this indicates is that Tesla could be setting up for a massive squeeze upwards or even downwards potentially. Basically, triangles indicate indecision and potential for a massive move as it gets closer and closer towards the triangle being completed. Tesla's earnings are right around the corner, so you can expect a massive move higher or lower. If it ends up pushing higher, we could potentially see a move back up to all-time highs, and if it breaks below on potentially bad earnings, which I highly doubt will happen, but anyways, let's say that does, then we could see Tesla probably pull back below 400 to around the $370 to $380 level. So make sure you subscribe and like, and let me know down below what you guys think about Tesla stock and what you guys are expecting from its earnings as well. I'm super duper hyped, and so let me know all of that, do all that good stuff, and I'll see you guys next time. Take it easy, clocking out for now. Peace.